Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And boy did we get a choppy day today. We are still within this, I've been calling it a bear flag, but at this point it's not even a bear flag. It's been retracing too much, but we can refer to it as a channel, okay? Right now we did not break the range of the channel yet. Maybe we're getting pretty close. For tomorrow, the breakdown will be around 395.83 based on this channel. Okay, as long as it holds and defend, we got to see bulls break some more resistant levels. And, you know, if it wants to fill up this channel to the upside. Okay, so as far as today goes, guys, it was pretty choppy. As you guys can see, we did have a nice trade in the morning. See, my style, guys, my style is level to level. I'm not looking to play home run plays. You know, I just level to level with a decent sized capital. You know, make my few percentage gains, end the day green. You know, so as I wrote here in the Discord, I got first support at 398 and first resistance at 400. As you guys know, I short breakdowns of support and I long breakouts of resistance. And right here is the 930 candle. SPY opened around 398.11. So right above 398. And it chopped a little bit in the first half an hour, but eventually we got the breakdown. All right. Remember, Uncle considers it a breakdown when we get a close below the level on the 15-minute chart, okay? Or higher. Higher time frame, it means more, obviously. But at minimum, 15-minute chart, okay? That's what I do, okay? And as you guys can see here, it gave us a nice level-to-level move down to the 396.5 level. Now on my daily chart, that 396.5 level, as you guys know already, is the 50% fib level from December low to February high, okay? So yes, nice level move to open up. I'm thinking we're off to a great start. This is going to be a nice trend day to the downside. We'll see what happens. And unfortunately, we chopped. I'm talking about we chopped badly for hours, man. This probably messed up a lot of people, okay? And it messed me up too. Uncle was 1 for 2 today, okay? I only did 2 trades. You know, I don't try to trade too much. I don't try to take on too much risk. Just get a nice green. You know, I try to keep it below 3 trades a day and, you know, reset for tomorrow, okay? But I ended up, when we broke down 396.5 on this 1045 candle, I was still holding runners, feeling good, runners from 398. And then when it recaptured here at the 1115 candle, I just cut the runners, okay? So pretty much held the runners for no reason, okay? But I did try calls for the false breakdown setup. It was, you know how I feel about false breakdowns and false breakout setups. So I figured, okay, we got a false breakdown setup. I'll enter calls. And as you guys can see, it did not work out. I got out. You know, luckily it was a small red and it did not disrupt the profit I made from my first trade. So 1 for 2, small green day for Uncle Charles. All right. But overall, we can see that it just pretty much chopped, and we go on a daily chart. We can see that, yes, it is a red candle, but it did close higher from last Friday. So that's something to consider, all right? Here's the important levels, okay? The most important structure and levels is on the daily chart to the weekly chart, okay? And yes, we got the gap up today. And technically that is follow through based on last Friday's action. Okay, remember on last Friday's action, we recaptured the neckline. This pink line is the neckline of my head and shoulder pattern, okay? Left shoulder, head, right shoulder, okay? So that's a false breakdown setup from last Friday, and it did trigger a decent move up to 398.9-ish. All right, so that's, you know, about almost a $4 move. But if it wants more upside, this neckline must hold as support, guys. All right. So I got the neckline at 395.2-ish. Overall, it needs to stay above 395 to stay bullish. As long as above 395 is bullish. And to show follow through, I have this green trend line here connecting February 14th high to March 6th high, and we got a test of that today. You can also count March 22nd as well, okay? So there's multiple touches. So the breakout of that trend line right there is 398 for tomorrow's 398.6. All right. So remember, defending 395 is a must if you're a bull. Okay, it's a must. But to show follow through or to show more momentum, you need to clear that 398.6 level, break out of this green trend line to trigger more upside, 400, 401.6, and maybe a third test of this yellow trend line I got, which would be for tomorrow, would be at 403.2. Okay, so above 395.2, I recommend to stay short-term bullish, but watch for the breakout of resistant level. 396.5 is a level, and that 398.6 level is another level I'll be watching, okay? Long the breakouts of these resistant levels and set a proper stop loss, okay? Now that's the bull case. Bear case scenario, today, SPY closed at 396.49, so a few cents below that 50% fib level, okay? It's at 396.54 to be exact. So to show follow through, if you're a bear, you want to see 395.2 break down. If that happens, look to short, okay? Hopefully we don't get a chop day like we did today, and we can get a decent trend day tomorrow. But with 395 breakdown, that's when my bear case scenario starts, okay? Breakdown 395.2. I might be sounding bullish earlier, but if 395.2 fails as support, I will get rid of my bullish sentiment and switch to the bearish sentiment, and I will look to short, okay? Let's see. Watch that 200 daily moving average. It's at 392.2. And watch that 61.8 fib level at 391.4. That's a support. Okay, 389.5 is a support that I'm watching as well. That's a critical support. 389.5. Okay, now that was, the pivot low for last Friday was 389.4. Okay, but the reason why I'm watching 389.5 is if I get rid of all these other ones and I start another Fibonacci channel retracement, retracement levels. All right, this is from the February high. I want to get the levels exact, and then to the March low was 380.65. Okay, so yeah, 389.54 is that 23.6 fib level, okay? Last Friday, we kind of got a bounce off of that. And this 395. I've mentioned many times 395 is a level that I'm watching. And there it is as the 38.2 fib level based on the downtrend we have from February high down to March low. All right? So there you go. 395 is based on the neckline. And it's also based on a Fibonacci level. So that loss of that level will be when my bear case starts. All right, I would swing puts if that level is lost. All right, but yes, below 389.5 would definitely be bearish as well and would trigger more downside. All right, guys, so you guys got my levels, you guys got my setups. Get bearish if we lose 395. As long as above 395, bulls got a shot at more upside, but they need to clear some resistance. 396.5, 398.6, 400, and so on. Okay, guys, 395 is the equilibrium level. Bullish above, bearish below. Keep that simple, guys. Triple Q, still, it tested that 311 level last Friday. It gapped above, but intraday it broke down 311, and it tested 309. It almost tested the 307 level, okay? 307 is a critical support level. Why? Because last Thursday and Friday, we got some strong bounces off those levels, as you guys can see right there. Okay? So a loss of 307 would indicate that the buyers are going at that level and the sellers are coming in. So loss of 307, I would definitely short that and favor more downside. All right? I'll be targeting 303.8, 302. After 302 would be 299.2-ish, and then down to 295.6 would be a critical support level for Triple Q, all right? So, yes, if that's the bear case, the bull case with Triple Q is if it can recapture 309 and clear 307. It has tried to clear 307 multiple times intraday, and it gave us some nice day trading moves. But on the daily chart, it has not cleared 311. All right, and we need to get a close above 311 on the daily chart to be more bullish, to put 312.5, which tested today, 314, 315.2, and 317 above. All right, that's the bull case for Triple Q. IWM looks like a doji. We got a doji here after a green candle, decent body candle, got a gap up with a doji. Be careful, guys. Could be a reversal tomorrow for IWM. Be careful if we get a big red body candle. All right, there's support at 172.3ish. All right, or 172 down to 172, 172.3. If that fails, look to short a 170, 168.5, and 165.7 in play. All right. If it can clear that resistance at 174.5, it will put 176.5 and 179 in play. All right. So to be bullish, it needs to clear at minimum that 174.5 resistant level. Apple, guys, we got that Fibonacci level, right? That 61.8 Fibonacci level from all-time high down to January 2023 low, okay? It was at 160.5. We rejected around there today, all right? That's pretty bearish. We still look, overall, it still look like we're basing just below it. But this big red candle and a rejection from that level, that looks bearish. We need to see follow through, though. 157.8, 156.3 our next support. If we can break down those support levels, that's follow through in my opinion. That's bearish in my opinion, okay? Apple's a market moving stock. So if it break down these support levels, it should bring SPY and Triple Q with it. Okay, so below 156.3, I'll be bearish. Watch that support at 153.5. Okay, 153.5 failed. That's even more bearish with 151.6, 150, and 146.6 is in play. Okay, guys. Tesla still unable to break out this bear flag. Okay, bulls are still unable to break out the bear flag. However, bears are still unable to break down this fib level at 190.3 and still just above the 20 daily moving average. Okay, you guys know what to do. If we can break down these support levels at 190.3 and especially the 20 daily moving average, look to short, guys. Below the 20 daily moving average, I would swing put. I do have support at 186, but there's a gap at 183 with 180 and 175.6 below. All right. To break out of the bull flag, it has to clear 193 tomorrow. Okay, we've been getting above this level intraday, but we need a close above that level on the daily chart to indicate more upside. 193 would put 194, 196, 197.5, and possibly 200 back in play. Okay, let's take a look at some inverses. Starting with the DXY. Yesterday, DXY got within pretty close to retesting that 103.44 level as a resistant. Did not break it out, getting a roll change, and right today, pretty red day overall, a red day on DXY. Didn't break out or break down any critical levels, but that is a red candle. So remember, I have a support based on a Fibonacci channel line at 102.5. Break that down, we could see more downside to 101.9 and possibly down to 100.9. Okay, to be bullish, it just needs to recapture 103.4 and 104.1. Until that happens, is looking, at least in the short term, looking short term bearish on the DXY. Okay, the VIX is also looking bearish because today it closed back below the 23.6 fib level at 21.2. All right, we broke this out back in March 9th. Today is the first day since we broke out that it closed back below. That's a false breakout setup. So for this false breakout setup to show follow through, it needs to stay. VIX needs to stay below 21.2 to trigger more downside with 18 and 17 in play. All right, recapture 21.2 to cancel this false breakout setup. Now here's the option flow, very bearish, filter for 500K premiums or above. All right, over 44,000 put contracts compared to 1,000. Okay, this is what it's showing us. Contract that does stick out is this one here, April 21st, 365 strike price, over 8,000 in size, over 900K in premium. This one's a 390 strike price, over 5,000 in size, 2.4 million in premium. That sticks out, all right? So very bearish right now as far as puts. Could they be hedges? Maybe. That's all. We got to combine this information with the price action, all right? Now, puts are 32% for the triple Q and 68% in calls for triple Q. All right, that's pretty different. But looking at these contracts, nothing really sticks out with the low sizes, okay? And only a few sweeps. You know, look at the amount of contracts that was bought today or sold. It was very little. IWM, now this is much more interesting. 97% in the puts. That's over 52,000 in puts compared to 1,800, okay? Very bearish for IWM. These expiration dates, May 19th, 165 strike price. You know, over 6,000 in sizes, April 21st. Lots of puts. Something to note, guys. Lots of puts has been coming in for the April 21st date, all right? This is 166 strike price. All right, this is 165 strike price for May 19th. So all these puts that we're seeing, they got time on it, but they're pretty aggressive, out the money. All right, Tesla, 75% in the puts, only a small amount, 5,000 puts compared to 1,800 in calls. All right, nothing that really sticks out here. Apple, 100% in the puts, all in puts, but low size order. April 21st again as well, guys. And the VIX, 67% in the puts. The VIX has been bullish as far as option flow goes lately, and this is the first time seeing it bearish, you know, in a week or so. So, you know, that's something worth noting. Okay, guys? So thank you guys so much for watching. If you want more content from Uncle Charters, please consider joining my Discord. Other than that, have a good evening. Peace.